Let's take stock of the global handover from last night, beginning with the United States. Now, there's three main factors which really hit the US markets yesterday. One is the Pfizer-BioNTech deal for the vaccine, which is between a US company and a European company. Then you have more stimulus talk as the US gears up for another $1 trillion and Europe just passed 750 billion euros. And then third, Tesla with the surprise beat on its Q2, posting a fourth straight quarterly profit. So these were the three macro forces driving the market yesterday. Stocks rose on all of this news. Your Dow gained 165 points or 0.6%. It was the Dow's third straight gain as well. The S&P also rose for a 4-day winning streak, and the S&P is now traded at its highest level since 5 months. The Nasdaq advanced 0.2% on the back of that Tesla number, like we said. However, the one negative counter force that was acting against all these positive cues was the fact that the US-China tension really escalated yesterday. You saw the US talking about shutting down the Chinese consulate in Houston, to which the Chinese sharply retaliated, saying that they would also shut down the US consulate in Wuhan if any such thing was done. So this is a bit of geopolitical tension, which was also weighing down on the markets on the negative side. Coming down to Europe, Europe was not very happy yesterday. It was definitely riding on the back of the COVID cases more than their recent stimulus cheer. So what we saw was the stock 600, based on the stimulus news the last couple of days, has really been advancing steadily. That seems to have tapered off yesterday in a big way when the stock 600 fell 0.9%. Over here, oil and gas stocks were the major losers, losing 2% each, but all your major bosses actually ended the day in negative territory. Now, coming down to Asia, a major Asian market, Japanese, is shut today, so we're not going to get any details from the topics or the Nikkei. But what we can see is that the Australian markets are also digesting all the geopolitical tension, as well as the COVID cases, as well as no direct stimulus in Asia. So the the Australian benchmark, ASX 200, is flat. Your South Korean Kospi was actually down 0.42%, and let's remember they're one of the better performing indices in Asian markets of recent times, and Japanese markets, like I said, were closed. So that's how Asia panned out for you. Let's now look at oil and gold. We saw oil advancing a couple of days ago on the fact that demand was improving, inventories were shrinking, and that the OPEC was not too aggressively looking to ramp up production. There's a bit of a reversal this morning. The US government data collected for June actually shows that crude inventories have risen much sharply than what people initially anticipated. So we're going to have a lot of supply of crude and not enough demand. And the last time that happened, we saw what happened to crude prices. Now, there's not going to be that big a fall because we have unlocked and global economies are working, but there's definitely a higher buildup of inventory than what was anticipated. Also, tensions escalating between the US and China, China being the world's largest oil consumer, on par at least with the United States, doesn't really help the outlook for oil much either. So on the back of this, Brent fell to $44 and then WTI settled at around 41.90 cents per barrel. So that's how the oil shaped up. Looking at gold and silver, the rally just continues. Fresh highs for both of them, gold and silver. Gold at $1,865 per ounce now. It was just $1,800 per ounce like a week ago. Silver is also now at a 7-year high, finally bridging that gap. There's only so much gold can advance and silver stays sitting behind. You can't ignore that separation ratio. When it hits a certain point, people are going to start buying silver, and that's what we've seen right now. So amid all this geopolitical uncertainty, people can't figure out why equity markets are rallying, so they're scared to invest in equity. Gold and silver is your safe haven, and a lot of investors are flocking to that. So those were the global cues for this morning.